June 12, 2026, may be one of the most important days in the history of financial markets, and most people have no idea it's happening. Listen closely. In just a few days, SpaceX, one of the most valuable private companies on the planet, is expected to open its doors to public investors for the very first time in its history. Remember Amazon in its early years? Very few people believed it would become one of the largest companies in the world. $1,000 invested in 2001 would be worth over $60,000 today. The people who ignored it still regret it. Some investors believe SpaceX could become one of the most important investment stories of this decade. Whether that turns out to be true, nobody knows for certain. But the window to pay attention is right now. SpaceX is no longer just a rocket company. That story is old news. In 2026, it's Starlink, over 12 million paying subscribers across more than 160 countries. It's Starship, the most powerful rocket ever built. And since February of this year, it's XAI, artificial intelligence fused with space infrastructure. In February 2026, the merger between SpaceX and XAI valued the combined entity at approximately $1.25 trillion. But the official IPO price of $135 per share implies a market valuation of $1.77 trillion. That makes it the largest IPO in history, more than 2.5 times the previous record set by Saudi Aramco in 2019. The ticker is SPCX. The IPO price is $135 per share, and the target is to raise up to $75 billion, which would make it the largest public offering ever attempted. In the next 12 minutes, I'm going to walk you through 4 real ways investors may gain exposure to SpaceX, from the most accessible to the most advanced. No hype, no filler. But first, you need to understand why so many people are paying attention to this moment. What is SpaceX in 2026? Most people hear SpaceX and immediately think rockets, Elon Musk, Mars. And that's understandable. Those projects helped make the company famous. But in 2026, SpaceX is something far bigger than a rocket company. It's one of the most valuable companies on the planet. Period. SpaceX was founded in 2002 by Elon Musk with one very audacious goal: make humanity a multiplanetary species. Yes? Mars, the red planet. The man doesn't think small. But while pursuing that vision, the company also built several extraordinarily profitable businesses right here on Earth. Today, SpaceX operates around 3 major pillars. The first is Starship, the most powerful rocket system ever developed. It supports satellite launches, future lunar missions, and eventually missions to Mars. Think of it as the company's heavy lifting arm. The second pillar is Starlink, and this is where many analysts believe the real money flows today. Starlink uses thousands of satellites to provide internet access around the world, including areas where traditional infrastructure simply doesn't exist. Mountains, oceans, rural areas that never had cable. Starlink is there. As of June 2026, the service has surpassed 12 million active subscribers across more than 160 countries. It's the company's cash cow. And the third pillar, the newest and most surprising, is XAI, Elon Musk's artificial intelligence company. In February 2026, SpaceX acquired XAI in an all-stock deal, with a combined valuation of approximately $1.25 trillion at the time of the merger. Supporters of the company argue that this combination, satellites, launch infrastructure, and artificial intelligence, makes SpaceX unlike almost any other business currently operating at scale. To put that number in perspective, Apple took decades to reach that level of valuation. NVIDIA got there riding the AI wave. SpaceX did it by combining 3 industries at the same time, a category of one. And this is where most people start asking the obvious question: how do I actually get in? Good question. But first, if you're finding this useful and want more videos that explain investing in plain English, consider subscribing. It helps the channel and lets me keep making content like this. Okay, let's get into it. The IPO, potentially one of the largest ever. Before we talk about investing, let's quickly define one important term. IPO. It stands for Initial Public Offering. Here's what it means in plain English. Imagine your neighbor runs an incredible restaurant, always packed, always delicious, but it's privately owned. You can eat there, you can support it, but you can't own a piece of it. Then one day your neighbor decides to sell small shares of the business to anyone who wants in. That moment, when a private company opens its doors to public investors, is an IPO. Until now, SpaceX has remained a private company. Access was generally limited to employees, institutional investors, and certain private market participants. If you were a regular person, you were locked out. That's about to change. According to filings confirmed with the SEC, SpaceX is expected to debut on the Nasdaq, the same exchange where Apple, Google, and Amazon trade, under the ticker symbol SPCX. The official offering price is $135 per share. The fundraising target has been confirmed at $75 billion through the sale of 555.6 million Class A shares. For comparison, the previous largest IPO in history was Saudi Aramco in 2019, which raised $29.4 billion. This would surpass that record by more than 2.5 times. Why so much attention? Because many investors see SpaceX not just as a rocket company, but as a company operating across satellite communications, launch services, and artificial intelligence, the foundational infrastructure of the next digital era. Now, here's the part most channels skip over. An IPO is never a guaranteed success. Some highly anticipated IPOs have performed extremely well, others have been disasters. Uber dropped over 40% in its first year. Lyft did the same. WeWork collapsed before it even made it to market. With SpaceX specifically, there are real risks every investor should understand. First, share restrictions may apply. Certain shares could be subject to a lockup period, meaning you can't sell immediately. Second, early trading can be extremely volatile. Prices can swing 20% or more within hours. Third, regulatory changes could impact the business significantly. And fourth, at a valuation of $1.77 trillion, some analysts believe the upside may already be priced in. I'm not saying don't invest. I'm saying go in with your eyes open. The 4 ways to invest. All right, now the part you've been waiting for. 4 real ways investors may gain exposure to SpaceX, ranked from most accessible to most complex. Pick the one that matches your situation. Option 1. Buy shares directly on the Nasdaq. This is the simplest approach, and the one most people will consider first. Once SpaceX begins trading under the ticker SPCX, anyone with a brokerage account that has access to the Nasdaq can purchase shares directly. Which broker? Depends on where you live. In the US, Fidelity, Charles Schwab, and Interactive Brokers are solid options. Outside the US, Interactive Brokers still works in many countries, as do apps like eToro or Webull. The process is straightforward. Open your account, fund it, search for SPCX, and place an order. The official IPO price is $135 per share, but on the first day of trading that number could move significantly in either direction. And here's the most common mistake beginners make on IPO day: buying at the peak of the excitement. The price spikes, everyone rushes in, and then it drops. For some investors, waiting for the market to settle may be a more comfortable approach. Patience is one of the most underrated investing skills. Option 2. Pre-IPO secondary markets. This is a more advanced and significantly riskier strategy. Certain private market platforms allow eligible investors to purchase shares before a company officially goes public. These opportunities often come with serious restrictions. Shares may be difficult or impossible to sell when you want. Transactions can be blocked by the company itself through right of first refusal. Lockup periods may apply. And accreditation requirements exist in most jurisdictions, meaning not everyone qualifies. As of early June 2026, shares on these platforms were reportedly trading between $420 and $674 per share, significantly above the $135 IPO price, because you're paying a premium for early access and taking on significantly more risk to get it. This is generally not where most beginners should start. Option 3. ETFs with SpaceX exposure. For many people watching this, especially beginners, this may be the most practical option. An ETF is essentially a basket of investments bundled together into a single product. Instead of betting everything on one company, you're spreading risk across multiple holdings. If one stumbles, the others keep running. Several space-focused ETFs already include exposure to SpaceX or companies operating in similar industries. One concrete example, the TEMA Space Innovators ETF, trading under the ticker NASA, which holds approximately 6% exposure to SpaceX as of June 2026. The benefits are clear: diversification, daily liquidity, and no accreditation requirements. Anyone can buy through a standard brokerage account. The trade-off is also real. If SpaceX performs exceptionally well, the ETF may not rise as much as the stock itself. But if things go poorly, the losses may also be less severe. For many first-time investors, that's a trade-off worth considering. Option 4. Indirect proximity. Investing. The most conservative approach of all, investing in companies that have business relationships, investments, or strategic connections to SpaceX, without buying SpaceX directly. Examples include Tesla, which frequently moves with SpaceX news given the shared leadership; Alphabet and Bank of America, both of which hold stakes in SpaceX; and Starlink component suppliers, companies manufacturing antennas, semiconductors, and satellite hardware for the network. This approach generally offers lower risk, but also lower potential upside. It's a bit like betting on the uniform manufacturer instead of the team itself. More conservative, but still part of the broader story. Is it actually worth it? This is the question everyone wants answered. Is SpaceX worth investing in? The honest answer is that nobody knows for certain, but we can look at a few possible scenarios. Optimistic scenario: the IPO is successful, market reception is strong, Starlink keeps growing, the XAI integration creates real value, and investors reward the company with a higher valuation over time. Early investors do very well. This has happened before with transformative companies. Neutral scenario: the company experiences volatility after the IPO, then settles into steady long-term growth. Not an overnight fortune, but in 5 years, SpaceX becomes a reliable holding in a diversified portfolio. Solid, if unspectacular. Pessimistic scenario: the market decides the $1.77 trillion valuation is too aggressive. Growth slows. Regulatory challenges emerge. A major operational setback shakes confidence. People who bought at the peak on day one take losses. All of those outcomes are genuinely possible. Before you invest a single dollar, ask yourself one important question: can I afford to lose this money without it affecting my daily life? If the answer is no, if that money is for rent, food, or emergencies, do not invest it. No opportunity, no matter how exciting, is worth putting your financial stability at risk. And remember one principle that has stood the test of time: diversification matters. SpaceX may become part of a portfolio. That doesn't mean it should become the entire portfolio. All right, let's bring it home. 3 things to remember. 1. SpaceX has evolved far beyond rockets. Today, the company spans satellite internet with over 12 million active subscribers across 160-plus countries, advanced launch systems, and artificial intelligence, with an IPO valuation of approximately $1.77 trillion. 2. The expected Nasdaq debut on June 12th could become one of the most closely watched IPOs in recent years. But attention and excitement do not eliminate risk, so go in informed. 3. You have 4 potential paths: direct shares, pre-IPO secondary markets, ETFs, or indirect proximity investing. The right choice depends on your goals, your experience, and your risk tolerance. Now I want to hear from you. If SpaceX goes public as expected, would you buy the stock directly? Would you prefer an ETF, or would you stay on the sidelines and watch? Let me know in the comments. I read every single one. If this video was useful, hit the like button and subscribe for more investing content explained in plain English. And in the next video, we're going to walk through exactly how to open your first brokerage account. Step by step, no jargon. The best time to start investing was 10 years ago. The second best time is right now. Thanks for watching. See you in the next one.